just their technology is way out front. I think it's almost empirical right now in terms of what they've been able to do, even relative to Tesla.
Yeah. Look,
and
Waymo
you would put Mobileye even behind them. I mean, just in terms of where things are.
No, for sure. Look, Waymo's doing amazing work, and we talk to all these companies all the time. There'll be a lot of different technologies when it comes to self-driving. Already today you've got Waymo, you've got Cruise, of course, although they're not operational.
David, I'm sorry, we got to run. The futures are tanking based on some data that's out right now. You're now looking at the Dow futures off by about 222 points. Let's get right to Rick Santelli. He has that CPI number.
Yes, it's hot data. We look at yields moving up, pre-opening equities moving down. January read on CPI up 0.5%, up 0.5%. We're looking for up 0.3, in the rearview mirror up 0.4. And I do caution, there's annual revisions coming out, so some of my comps may change. But at this point, to find a higher number than 0.5, you're going all the way back to June of 22. We've had plenty of 0.5s. But that's where the higher number is. And if we strip out the all-important food and energy, also hotter, up 0.4, double what's in the rearview mirror, equals several occasions, but the highest number, to be a higher number, 0.5, would be April of 23. If we look at the year-over-year data, up 3% on the headline year-over-year, 0.1 hotter than both front and back. And if we look at 3.0, it would be the warmest going back to May of 24. Now, let's look at year over year and strip out the all-important food and energy. Also hotter, 3.3. We're looking for 3.1. Rearview mirrors 3.2. To find a higher number, you're going to May of 24. On the indexes, remember, these go back quite a ways. And are we making new highs here? Yes. New high, 317.67 on the non-seasonally adjusted. If we look at core, 324.74, also a new high. There's never been higher indices on either headline or core. And I also would like to throw a little water on the conventional wisdom that January is this big, important reset. I looked at 21, 22, 23, and 24, 4 years post-COVID, and maybe one time in every synopsis, so whether it's headline, year over year, was January the highest. There was many where it was equal to other months, but predominantly we saw many February and Marches that were higher. So the reset, I don't know that I buy into it, but in either case, if there are resets, this month certainly looks like one. Back to you.
Rick, stay with us. Let's very quickly look through these boards again. As Rick was pointing out, we looked at the equities tank. You're now looking at the Dow futures off by about 400 points, just over 400 points. S&P futures are down by 57. NASDAQ indicated down by more than 220 points. If you've been watching Treasuries, we did see a very significant tick up in Treasuries as well. The 10-year, which was trading, I think, at about 453 this morning when we started, so all the way up to 461. The 2 years at 437. Joining us right now for more on this information is Priya Misra. She is the fixed income portfolio manager at JP Morgan Asset Management. Drew Mattis is the head of global economic and market strategy team at MetLife Investment Management. And Drew, let's just start with you. Markets didn't like this.
No, the focus was going to be on the core year over year. 3.2 would have been bad. And what we got was worse, right? So, it's really disappointing news for the Fed that they were hoping for continued deceleration. It's disappointing for the market because they're hoping for continued deceleration. And the fact that this is a January number and doesn't include any potential, tariff impact yet, means that, the risk going forward is for potentially higher inflation.
It comes just after Donald Trump put out on Truth Social the idea that the Fed should be lowering rates to go along with the tariffs that we could be at this time. This puts the Fed in a pretty tight box. It's hard-pressed for them to be able to lower rates at this point.
Well, it does. I mean, you need to, they shouldn't have been lowering rates in the first place. So they kind of got themselves into a box. They tried to get in front of things heading into the election, and they went a little too far too fast. And then they continued easing even when, everything should have been telling them that they should have been stopping.
This is that nascent inflation that we were worried was in the back of our minds. We were worried that it was still there. Isn't that what we're seeing right now? This is like our worst nightmare coming true. We didn't do anything. We didn't do any tariffs yet. This was already coming, wasn't it?
But what I would say is the last mile of inflation. There's some research that's hard. I mean, we have
last mile is hard.
8-9% on inflation to 3%.
But we're going back up. We're not going.
Well, I think, January
It's now
does
a mile
seem
and
to
a
have-
quarter. It's now a mile and a quarter, Priya.
So there is this seasonal aspect to the start of the year. The first quarter has been high. I think there's some of that. Look at the totality of inflation. PCE is heading lower. I look at wages. Wages are showing you some signs that it's decelerating. I think the Fed is going to be on hold. I completely agree with you. And I think we're going to watch the data. But I would say for the Treasury market, one of the reasons we got to that 480 was talk of fiscal stimulus. I mean, there's this inflation fear. I hear you. And I think that's why the market's reacting today. What do we hear on taxes? Are we going to hear deficit finance tax cuts? We're going to go up a lot more in rates. We're not hearing that. We're hearing DOGE. We're hearing where are we cutting spending. We're hearing about offsets. I think that's what's going to contain the Treasury market beyond this inflation fear that I think is legit, and it's going to keep the Fed on hold.
Well, and the risk with inflation right now, and you're seeing it in the data, you're seeing it in consumer credit data for December, which was crazy, which is people are cutting their savings, they're boosting the amount of money they're borrowing in order.
Good morning, guys. So we just got the inflation print. This is something that, I was saying was a possibility. Obviously, I wasn't the only one. But even if you just look anecdotally around you at the grocery store, or if you're trying to rent a place, or if you're trying to buy a house, pretty much the anecdotal pricing that you see around you in society, it seemed like things were getting more expensive again, and the numbers bear it out. So CPI came in 3% versus 2.9. That wasn't the big shocker. I think core CPI coming in 3.3 versus 3.1, and then the month over month is definitely hot. So 0.5% month over month versus 0.3%. And remember, inflation hasn't gone down. It's just the rate of inflation was coming down, and now it looks like it's hovering around that 3%. Now, this is not even taking into account the tariffs and potential inflationary pressures coming from tariffs. I think this is personally, I think it's going to get worse. As I told you guys when back when Trump won in November, the battle between the Fed and between Trump is going to be a rough one. And already today, Trump is telling the Fed that they need to lower rates to go along with his tariffs. But obviously, you can't lower rates if the CPI is coming in much hotter than expected. The Fed can absolutely not lower rates, and they shouldn't lower rates. But he wants them to lower rates because he knows that tariffs could be inflationary. So, this is part of the reason why I was telling you guys that for 2025, if you have short-term positions, mid-term positions, basically, not talking about a long-term portfolio that you've been building for 20 years, but, mid-term, shorter-term positions, that it's going to be rough. You're not going to see straight lines up like we saw in 2023 and 2024, and you probably should consider offloading some risk, right? Because this is not a risk-on environment, at least not to me. You already see how January and February is bearing out. It looked like January was, if we take out these candles here, it looked like January was shaping up to be pretty nice, right? That was January, and we were like, oh wow, we're back to mooning. Obviously, I didn't think that. I knew that once February hit, it was going to be absolute trash price action. You can go back and check my videos on that. And then once February hit, you're starting to get this choppiness with some extremes in the middle, right? So like March 27th on Monday, that was the day that DeepSeek news came out. NASDAQ was down 3%, Nvidia was down 17%. These are things that don't happen that often in healthy markets. So, a hot CPI print is not good because the Fed has their hands tied. Well, they don't have their hands tied, actually. If you heard what Powell said yesterday, what Powell said was that they were in a spot where they can maneuver in either direction, and he's right. So if the Fed funds rate, if we pull up the FOMC watch tool, if the Fed funds rate is, let's pull this up real quick. If it's currently at, between 425 and 450 basis points, there's still a lot of maneuverability there. I personally don't think that he's going to raise rates at any point unless inflation would have to get so out of hand. Like, we'd have to hit the 4 handles on inflation before that happens. But I do think that, they are going to hold rates. They're not going to cut rates. I think they'll hold in May. They'll potentially hold in June when it was expected that they would cut. But now you're seeing that there's the highest chance is that the Fed actually holds rates. And this definitely wasn't the case a week ago. This was at 34%, and now it's at 49% chance that the Fed actually holds, because they cannot just be cutting if inflation is going up. So obviously between now and June, we will have another 4 inflation prints. But as of now, it looks like inflation is trending up. So this is also doing a number on yields. It looked like the 10-year yield, and I covered this in videos before, but this level right here on the 10-year yield, we popped below. And what we really wanted to see for the market to maintain upward trajectory, the stock market, is we wanted to see the yields come down, right? Instead, now with this hot inflation print, the dollar is rising like crazy, and you see that the yields go up 2.2% on the 10-year. So we're now at the 4.64 level on the 10-year, which is insane because, when the Fed started cutting, the 10-year was at 3.6. So this is the first time in history that 100 days after the Fed cut, the 10-year is higher than it is lower. And not only is it higher, it is much higher. It's not even slightly higher. So this is not, in my view, this is not a healthy market, right? This is a very volatile market, and I think there isn't as much upside as there isn't as much upside versus the risk required to stay in as there is not even downside. Although I do think, in my view, I think between now and June we will get a huge limit down at some point. I think the market will shock people between now and June. There will be a day or two when we hit, circuit breakers down for sure. Just imagine if we get, inflation trending up, like if the next CPI is 3.3 or 3.5. Imagine if, because the January inflation numbers are the February inflation numbers are taking into account January, right? January is typically a slow month after the holidays in terms of spending, right? But imagine now that you include tariffs being priced in, et cetera, you can see a world in which inflation does go up and the Fed cannot lower rates like Trump wants them to, right? So to me, this is not a very comfortable environment to be in. I've been around the market for a long time. And yeah, I mean, as I suspected, 2025 will be, at least for Q1 and Q2, very muddy and ugly. It's not going to be pretty. It's not going to be, sustained periods of incline. Romizi, appreciate your donation, man. Thank you so much. Jason, appreciate your donation. Thank you so much for your donation to St. Jude's. Yep, Fed got it totally wrong. Well, the Fed has nothing to do with what's going on now as it relates to the inflation print. It's so funny. People are just spamming MAGA. Yeah, I mean, look, if you're not able to criticize government actions, or you're not able to criticize the government, then you're cooked in the brain, right? You should be able to objectively criticize any government actions, right? As opposed to looking at your favorite politician as a rock star. All right, this guy's spam botting about Solana. You don't like that pennant forming the past 2 weeks? Bro, if you are trading off of pennants, yeah. That is like TA sorcery. Pennants don't mean nothing. Also, pennants can break, technically, if we're going off of textbook definitions of pennants, they can break either way. Is Cash King thinking of selling some altcoins? Bro, if you're in altcoins, you've got different problems. We're talking about stocks here. January CPI is 3/4 Biden. Yeah, I think January CPI is still under the Biden administration. I was not insinuating blaming Trump for CPI. No, that's not correct. It takes a long time for inflation to build, right? Now, I will say that the initial bout of inflation that we had in this country was spurred by Trump's stimulus and then carried over by Biden's stimulus. So back in 2020, I think they both contributed to the inflation that ran post-pandemic, right? It did start with Trump, and then Biden took it and ramped it up and put it on steroids. So they both had their own, bouts of stimulus for sure. But in terms of what's happening now, no. What's happening now is not because Trump was elected. I'm saying that in the future, this is not even pricing in potential inflationary measures caused by tariffs. That's what I'm saying. So if we are going to see inflationary markers that are a product of tariffs, they're not going to show up now. You'll see that later. So this CPI print here has nothing to do with tariffs just yet, is what I'm saying. I hope that was clear. How do you feel about Tesla? I don't have feelings when it comes to the markets. Do you think the Fed needs to raise rates again? Not yet. I think they need to hold 425 and to 450. Like if you just say the Fed inflation rate right now is 4.5, I think that is a level to hold, right? I don't think that they need to raise just yet. Now, if inflation gets worse, yes, I think they will need to raise. So if the next 1-2 CPI prints start trending upwards, then for sure I think the Fed will need to raise. Yeah, unfortunately. Powell speaks after the open. Does he speak today? Oh, yeah. Because it's a 2-day. First, it's in front of the Senate and then in front of the House, or vice versa. Yeah. I really hate those grandstanding circus testimonies, right? Yeah, I mean, we'll cover it here. But yeah, I appreciate the reminder. You're right, because it's 2 days. I thought we had enough of it yesterday, but apparently the market wants to subject us to more. So here's what I'm looking at in terms of in terms of the market. Like, this does look like an epic power of three, right? We've had consolidation, obviously, Asia, London, we were all just waiting for CPI. This is why if you try to trade overnight, it was probably terrible. But all this right here is consolidation, right? Overnight. And then this right here is a manipulation. I would not be surprised if we got a little bit of a retracement up. If we take a look at some of the stocks making moves pre-market, Tesla actually looks good. It closed at 328.50 yesterday, currently trading at 332. If the market was open right now, based on this pattern, I would have taken calls on Tesla, right? We broke market structure and retested. I definitely would have entertained calls here, but the options market doesn't open for another 40 minutes. But Tesla doesn't look so bad here. Now, in terms of where I think it's going, I think as I put out on X, if you guys follow me on X, I was saying that I thought the 100-day was inevitable because Tesla has a history. Once it drops below the 50-day, it almost always, I can't even look at a previous time where it didn't do this, but it almost always gets to the 100-day. That's what I was saying here. I said when it has significantly failed the 50 MA, it has dropped to test the 100 MA almost every time. So that is why I thought that Tesla would get to the 100 MA. Now, this kind of sucks because I did have a short on Tesla when we revisited the previous all-time high at this trend line, but I did end up closing it at around 375. Obviously would have printed like crazy if I held it. So I personally am not trading options here on Tesla. I don't think this is an optionable level. I think there's a very real chance that Tesla can fall to 270. That is a very strong level here. Resistance, resistance. Okay, you have resistance, resistance. You have support. Then you have this air gap. Then you have the 200-day moving average as green line, right? This right here is the weekly fair value gap. There's so much confluence here that I think Tesla, it would be around 270, 275. I think it's not out of line for Tesla to fall to 275, to be honest. I think we'll see a relief bounce because it's just been battered, but I think eventually it falls to 275. I think that, you know, obviously car sales and the last earnings were terrible. We're not going to sugarcoat it. Last earnings were terrible. Car sales are stagnating like crazy, not even a little bit, even though the numbers on the new Model Y are pretty good. But in general, their car sales are stagnating. So right now, the focus is on the AI future and not the car business. But they need to really deliver on some of these promises, such as the robotaxi pilot that they promised in Texas in June. That has to be delivered. They cannot be late on this stuff as they typically have been in the past, right? Or else the stock price, I think, just continues to tank. So between now and June, we'll see. But 275 is a real possibility in my view. And I don't think this is an area to trade options unless you're selling puts on Tesla. If we take a look at AMD, I took puts on AMD yesterday. I sent that out in the trade alerts. Those should open pretty green as AMD is down. So I bought those puts before market close. I bought the 110 puts, I believe. Let me see. Yeah, I bought the 110 puts expiring March 7th yesterday, like an hour and a half before market close. So I think that AMD has a little bit more downside left. There is a daily fair value gap here. So I do think AMD can test that $100 level. And we did reject off of this 2023 resistance. So this line here is major resistance from 2023. It's that level, right? So, and obviously if you look at its trend line, it's been trending down since October 2024, just engineered lower highs and lower lows. So I don't yet believe in AMD's breakout. It really would have to break market structure and retest for me to even consider longs. But right now, I don't believe in AMD just yet. Apple's pretty stagnant. Nvidia, pretty stagnant, but has had a nice run. We bought it at 118. Just to add to the portfolio, I sent out my thesis on Google yesterday, but looking intently at the 182 level on Google, Microsoft is just Microsofting. Always, it seems like it's fucking in this sideways pattern. Probably the worst Mag 7 stock to trade options on is Microsoft. So right now we're looking at the S&P down 1% pre-market, NASDAQ down 1% pre-market, RTY down 1.5%. And we see that gold is down because the dollar absolutely spiked. You can see here, this was the CPI news. So market opens right now in 34 minutes. And the VIX is spiked to 17. I thought it would be higher, actually. Surprised that it's only 17. I'll be honest. But yeah, as I've been telling you guys for this whole year, if you wanted to hedge with the VIX, once the VIX hits that between 14 and 15 level, that seems to be the base for this year, right? You can hedge with VIX calls. Now, you definitely don't want to buy long-dated VIX calls. That is a money loser 100% of the time. The trick with the VIX is you have to kind of time it, because there is no edge in buying long-dated VIX calls, right? So obviously the VIX is going to have pops, right? If I bought, say, a December VIX call, what edge would I have? Obviously, the VIX is going to sustain spikes, right? So if something is already known, there is little reward to be made, right? So the pricing of the VIX includes the obvious fact that the VIX will have spikes in the long term. So buying long-term VIX calls is really stupid. You won't make money off them. So with the VIX, the trick to making money with the VIX is buying shorter dated, which is very different than stock options, right? When we trade stock options, I think the big mistake people make is buying too short of a time frame. But when it comes to the VIX, you basically want to be able to time it, so you don't want to go more than 2 weeks out in your VIX calls. So you really have to wait for it to get to that basing level, and then buy calls a week out even. And you want to buy at the money calls. You don't want to buy like the 30 call. That's just stupid. You're not going to make money off it, right? So if the VIX is at 14, and especially if you're expecting data to come in, or even if you just want to hedge your portfolio because it's been so crazy, we've had VIX spikes every single week this year. You want to wait for that level, buy the 14 calls that expire the next week. And then the minute that you see a spike, you want to take profit, right? It's a very tricky game, trading the VIX. Elon is a missing CEO. Yeah, I personally think that Elon really needs to focus on well, he doesn't need to do anything, but if you are a Tesla shareholder, he definitely has to boost investor confidence by focusing on Tesla. Obviously, you could do whatever you want, but if you are a Tesla investor, you want to see your CEO 100% focused on your company, right? Like, it would be crazy if Tim Cook or Jassy or Sundar or any one of these, Satya, it would be crazy if they were like half focused on their company. Like, imagine if Satya seemed like he was working 25% for Microsoft and then off doing whatever. Microsoft would tank, right? I'm not going to talk about XRP, bro. Wrong channel. How is the VIX tradable? Isn't it a measure of volatility? This is a good question. So the VIX is an index and it's a measure of volatility. You're right. The VIX options are based on VIX futures, right? So there's a futures index for the VIX that is based on the measure of volatility, and VIX options are based on VIX futures. So this is a very good question, Louis or Louis. So a lot of people will, they'll look at the VIX, at their VIX options, and they'll look at the VIX index, this right here, and they'll think that their options are based on the index price, right? Makel, rewind the tape, bro. We went over CPI already. You can easily rewind on YouTube. A lot of people think that it's based on the VIX index. It isn't. It's based on the VIX futures. So if you look at the difference between the VIX right now is 17, the VIX futures is 17.85. So this is actually what those VIX options are based on, is the VIX futures. So that's a very good question, and I think people don't understand that. I have been day trading stocks for a while and I'm profitable. I know nothing about options. Should I try to learn? Respectfully, I have no idea who you are. So how the fuck can I answer that, bro? Dude is asking me like we're best friends. How could I answer that? I have no idea how much patience you have, how smart you are. I have no idea what your interests are. Yeah, sure, learn options. I don't know. You can learn ballet for all I care, bro. Whatever interests you. He's just asking about learning. No, he's not asking about learning. He said, should I try to learn? I don't know. Yeah, if it interests you, try and learn. If you're doing well with stocks and you don't have any interest for options, then don't. How can I tell you what your interest level is? Shauna McCullough. I don't disagree. Here's what I think the S&P is going. I think we're going to take out or threaten to take out that low right there, which isn't the February low, to be honest. The February low is actually right here. But I think we're gunning for that February low right there. So that's where my eye is right now. Now, obviously, as we know, there can be divergence between NQ and the S&P. So right now, like ES can hit that low while NQ doesn't, right? But that is what I'm gunning for, either ES and or NQ hitting that low. Now, if you look at where that low is, and the market opens in 25 minutes, but if you look at where that low is at near the 100-day moving average for ES. It's kind of far away for NQ, but we already did hit the 100-day moving average in beginning of February. So, but anyway, that's my target right there. And then at that point, this could be one big power of three. And we could see a nice retracement up. Maybe not all the way back up. I'm not there yet. But we could see a counter trade at some point. So I'll definitely be looking for signs of that. And I may stay out of trading the indices altogether. And I may focus on something like gold, which I think will have easier price action. So if you look at gold right now, gold took out this last fair value gap here. This is something I was actually eyeing yesterday. I think there's a long on gold to be had here. Yeah, that right there is the daily fair value gap. Fall forward trader, who, are you talking about me? Who are you talking about? Oh, appreciate it, bro. Yeah, I'm banning that Rubes guy. I think gold has the best potential setup right now. So that's definitely on my radar. The Dow, RTY, NQ, and ES. I think there will be a leg up, but I'm not looking forward to it just yet. There might be something interesting on oil. Yeah, I think the dollar will give back a lot of this spike, which would then spike gold. So I might take a long here. We're bouncing off of midnight right now. Do you trade small caps? No, dude. I think it's a waste of time. I'll elaborate on that to give you some more information, but no, I don't think for my trading style, I think small caps is a waste of time. I'm not saying you can't make money in it. Sorry. Excuse me. I think that you can't. I think that you can make money on small caps, but it's a lot of work. You have to do your pre-market list. You got to check which one has abnormal volume, which one is pre-market gapping, etc. I think it's so much work. Whereas if you're trading mega caps, it's always liquid. The price movements are somewhat predictable. They have very predictable support and resistance levels, and you can leverage this by trading options. So for me, I think that small caps are a waste of time. Like if you traded small caps, you'd have to spend hours doing scans and whatnot. So it's not for my style of trading. But if it works for you, then that's awesome. Does your charity go to Palestinian kids? St. Jude's goes to all kids. I have done specific charities in the past. So we have done charities for Palestinian kids. I did charities for the LA fires, for the Maui fires, back when that happened. But the mainstay charity that I've been donating to since 2021 on this channel has been St. Jude's, right? That's like the default. That's like the default charity that I picked. So every live stream has been a charity drive since 2021. I haven't taken a penny on live streams. But yeah, when there are situations that arise, I have done fundraisers for different things. Appreciate you, specialist perspective. Thank you. All right. I think there's a gold long that I'm very interested in. I want to see how the market opens. So ugly, dude. Nvidia might set up for another long soon. I like this level that it's retesting. So if you look at this previous support level that turned resistance, it's there, right? I did a whole free mastermind a couple weeks ago on how I swing trade. But you can see that there's resistance, support, resistance, support, resistance, now retesting at a support. This is a very important level for Nvidia. So this is a breakout and retest. I might buy calls on Nvidia here. Obviously the market is not open, but when the market opens, I might take calls to fill this gap to go higher to that 140 level. Of course, it's this guy that's being a fucking bot. What about metals? I just went over gold, bro. That's my favorite looking chart right now. I think gold goes higher. I think gold's next leg up touches that 3,000 level. Yeah, I think Tesla looks like it might potentially go green today. just as a little relief day, I don't think that, I don't think that it's going to have a significantly green push for a while. But yeah, Bitcoin, if you guys follow me, you know what my Bitcoin target is. I think Bitcoin is going between 75 and 80. That's my range for Bitcoin. I want to see if I can get a fill on gold. Okay, that's probably not going to fill anymore. What about copper? I don't trade copper. There's a breaker right there. Yeah, on NQ, that yellow line right there, or sorry, on ES, that yellow line right there is the the low from Monday. So that is my target on the S&P. And it looks like NQ might not take it out. So I can see a world in which ES takes it out and NQ doesn't. I'm going to set an alert here because I want to know when that happens. And I think that might create the divergence between NQ and ES. And I think there might be a trade up. Yeah, see the dollar is falling, which is going to rally gold. Just wish I can catch an optimal trade here. I used VXX and SVIXY. For what? VXX is horrible, by the way. I wouldn't trade using VXX. Can we see a second wave of high inflation? You're seeing it. You are seeing it, my friend. How about aluminum? I don't trade aluminum, bro. I don't trade copper. I don't trade aluminum. I don't trade foil. I don't trade batteries. like this. Do you trade adamantium? Yes. Is it going to surpass that? So either we could take it from this breaker, or from the 50% level. There is a fair value gap here too. Considering that market is going to open, I might opt to take it from here. This was not a breakaway gap, so there's a high chance that this gets retested. I think that's what I'm going to do. The market opens in 8 minutes, guys. Apple looks like it wants to recover. Yeah, I think we'll see a counter move up after market open. Check out Neo. No, bro, I'm good. No, I don't think gold is going to dump. It's a question of taking it from here or from here. I could take a position from here, and then if I get stopped out, take it from here. I personally can't wait for the market to open, but I do think that Nvidia is setting up for a multi-day long here. I might buy the 129 calls. Anonymous donated 20 runs to St. Jude's. Appreciate whoever that was. Thank you. I'm longing foil at the open. Yeah, bro. Reynolds rep. What expiry date for Nvidia? I'm gonna put it in the Discord if I take a swing. So come through and join. What index is for puts on VIX? VIX. The VIX is the index. Euro USD. Wrong channel, bro. I might take a crack on, okay, so the market opens in 5 minutes. I might take a crack on gold here, but market open might be so violent that it comes down to that level. Here's what I'll do. I'll just set this up here. Regardless. All right, so the market opens. How long that all going back to normal? New to your channel, like your approach. Do you typically like to trade high beta stocks as opposed to stuff like Costco? Are you kidding me, bro? Costco, aside from Uber, Costco is my best trade this year. But I trade options when I swing. So it's, you know, obviously I bought Costco shares too for a long-term hold, but yeah, I traded Costco calls. David Mendez, you're funny, bro. You are funny, bro. Alrighty, let's put this to the side. Let's move this here. Bullshit. Is RTY? RTY looks like it's set up for a long too. All right, market opens in 2 minutes. I'm gonna get some more coffee. 1 second, guys, don't leave. Hit that thumbs up while I'm gone if you want me to find you a trade. All right. Well, the long direction was right. Let's see what happens after market open. I think gold sets up for a long here. Market just opened, guys. Market just opened. We have Jerome Powell talking in half an hour, but it's one of these clown ceremonies. So we just hit London high on gold. Yeah, I mean, I think this goes higher. This could hit yesterday's high. I think this is yesterday's high. Oh, nice. Those AMD puts. Here, I'll show you my public account. This is the account I've been trading publicly, but we're up 30% on the AMD puts that I got into yesterday off of that technical level. Let me just update the Discord real quick. Up 30%. Take profits if you wish. Fire. On AMD, I think that this actually can have a lot more downside. Like I said, I'm targeting that $100 level on AMD puts. I opened these in my public account as well as my Thinkorswim account. But I like trading on this public account because I could show you guys my trades using a platform that I really like. So if you want to sign up for a public account, use the link in the description. The cool thing is they also give you rebates on options trades. So options trades are free, but you also get rebates on them. So they give you back a portion of the order flow, which is awesome. And it makes it really easy to invest in bonds, right? So they have a bond account that's made up of investment grade bonds that are paying close to 7% right now, 6.86%. It makes it also easy to buy treasuries. But I think that these AMD puts are going to play out even more. Let me see how much I'm up in my Thinkorswim. Whoa. Yeah. I think these AMD puts play out. All right, let's check on gold real quick. I don't know that we get an entry here. NQ and ES. Looking to see if we can get a counter trade up. I really wanted NQ or ES to take out that level. It still might, by the way. After rallying a bit, we might get a rejection back down to this level. But I would have much rather had that get taken out first. That way it makes it easier to trade the way up. But we'll see. I do think there will be a counter move to the upside. RTY is looking interesting for a long. Yeah, see that level right there. I think ES hits it first. But the question is, does it hit it from an area? Okay, here's what I can see happening, actually. Let me see this real quick. Okay. So I can easily see, you see that breaker there? I can easily see ES climb up to 50% and then get rejected here. Unfortunate I didn't get a fill on gold. To me, this was an easy read to the upside. Mainly because we dipped into that 4-hour fair value gap down there, which would have been an awesome turtle soup buy after CPI. And I could have traded it aggressively with an IFVG, an inverted fair value gap from here. I would have been done for the day, guys. This looks so ripe here. This is such a nice break and retest on Nvidia. This is a perfect area. There is a long coming up on ES is so much weaker than NQ, but there is a potential long coming up. Nice little bounce on Tesla here off of the 100-day. Like I was telling you guys pre-market, if the options market was open, I would have taken calls, but obviously back at 8:30, options market isn't open. But I think Nvidia comes back up today. At least back to pre-market high, back to that 8:30 high. At around 133.80. Okay. I think gold gets down here. I'm going to wait to see how it gets down here, but I think gold gets down here. You can scalp short it if you want. Yeah, I think that 50 level is where we likely see a drop. And I would like to see that level get taken out, at least on ES. Let's see. I wonder if this gives us a drop here. So if NQ gets rejected off of equilibrium, that 50% mark, I wonder if ES does too. I think we'll know here. Yeah, hit that like button, guys. If you want free trades, hit that like button. Let more people find the stream. Yeah, I think if gold can lose this level, I think it gets down here. Like I said, I think you can scalp it down to this level. If you scalped it short, you really want to see it lose this. If it loses this, it gets down here for sure. And we are also in a macro, so currently that one contract short on gold up 430 if you took that scalp when I said. I'm going to take profits at that level that I was talking about. Can move stop to break even here. I'll remove the original stop. But I think it gets down to that level. And then at that point, you can entertain a long. You can take profits here if you're just scalping it. I want to see if we can get down to that level down here where I have the long set up. I really want to see this flush. Hell yeah, nice flush. Keep going. I want to see it flush to that level. That level right there. Let's see if it gets down there. Like I said, my main bias on gold today was long, but I want to see if we can get down to that level. I might take profit at 29.15.4 or 29.15.5. All right, let's take a look at what's, I'll leave that be, but let's take a look at what's going on with Nvidia. If you took the intraday longs, you're doing well. I personally think that there's a multi-day long on Nvidia from this level. This is a very important level here. High, you had resistance, support, 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 resistance. This is a very important level. And I think Nvidia in the coming days jumps from this to 140. Unfortunately, the indices are not great to me right now. They're suboptimal. We're going to wait to see what ES does when it gets to this green level here, which is the 0.5. Because I think there's still a chance it takes out that level down there. And remember, Powell talks in 7 minutes. It's in front of Congress, so it's not going to be that much of a market mover, in my opinion. But yeah, I would really like to see the dollar fail here a bit. Or sorry, the dollar rally here a bit for GC to fail a bit. And then I think there's a long again on gold. Okay. So game plan is kind of working out based on what we're seeing in the market. Platinum might have a nice multi-day short. Very, very stubborn level here for gold. What do you think about US 30? I don't trade CFDs or Forex, bro. But I do think NQ. ES is much weaker, so I would much rather, if I'm going to take a short, it would much rather be on the S&P. I wonder if they'll have Jerome squawking today. Oh man, I was stopped out for break even on that gold. All right, well, I was hoping that gold would come. I still think it comes down here, but it might take out these equal highs first. I'm still long biased in general. Yeah, unfortunately, Jerome is not speaking. He's being questioned by the House. Yeah, I think I'm definitely going to trade calls on Nvidia before end of day. Multi-day calls on Nvidia from this level. Buys on ES should hold. I wouldn't be that confident, no. No, I wouldn't be that confident. When NQ gets to OTE and ES thereby gets to that 0.5, I think it'll be a much more precarious situation, bro. I don't think it's as automatic as you think. I think ES can easily lose all this and take out that low. Do I post my trades? I'm trading in front of you. What do you mean, do I post my trades? I mean, if you're part of the Discord, then yeah, you would get my trades. But if you're just talking about here, where do you want me to post them? Like, you want me to type them in the chat? Apologies, I don't understand what you mean. On the Discord? I can't just by listening, thinking about joining. Well, I do live stream every morning. And the trade, when I'm day trading live, if I have time, yeah, I will try to type everything out. Can I do it if I'm taking a very aggressive entry? No, obviously I can't. My first priority is to take the trade, so that I get in, and the people watching me, if they agree with the trade, they can get in as well. Sometimes, you know, like on something that's a slow burn, like if I'm looking at an Nvidia setup, and I'm thinking about buying multi-day calls, then yeah, obviously that's something I can post. But if I'm looking at a 1 minute chart on NQ, no, I mean, you can't possibly alert an entry and a thesis while also trying to trade and set up your stop limit. That's impossible. So this is why I tell people, you know, don't join if you're just looking for an alert service. Whether with me or with somebody else, you're not going to make money if you're just looking to copy someone's trades, because without the knowledge and the want to seek education, you're just going to be fumbling entries trying to enter. Then you're gonna be like, are you exiting? Did you exit? Is everyone out? Is everyone in? It's going to be the same regardless of who you follow or what platform you follow, because without the real intention to be educated on trading, you're going to fumble your trades. You're going to fumble your risk management. You're going to fumble your entries. You're going to enter late. It's just the case, right? But if you're trying to learn the thesis behind it, if you're trying to learn how to read the chart, why you're setting it up there, exactly are you looking for, then it'll be a lot easier to follow along because you already have a sense for, what's going to happen. So, I'm honest with people. I'm not here to try and take your money or whatever. And I care about traders and I care about trading. So this goes for any alert service. If you're just looking to join an alert service, you are going to lose money 100%. Now, if you have the intention of learning and educating yourself, you will likely be in a much better position. Like if you're not just looking for, do I buy calls or do I buy puts? Oh, how do I set up a spread? How do I set up an iron condor? I don't know what that is. Walk me through it. Like without wanting to actually learn, you're technically, fundamentally, operationally going to be behind always because trading is hard. Executing is hard. So those that end up making money, it's no secret that it's those people that are really focused on learning about risk management, learning about chart reading, learning about their bankroll management, learning about stops, learning about exits, learning about if they want to trade options, learning about options. Those are the people that end up making money. No one has ever made money without wanting to learn in this market. Nobody. Whether you're following me or Warren Buffett, right? Because at the fundamental level, you have to pull the executions. You have to manage your risk. And if you're not there yet, doesn't matter what calls you follow, you will lose money. I hope that makes sense. Robert, can you work for us for free? Do I look like your mother, Robert? No. She's the only one in this neighborhood that works for free. Otherwise, it's just expensive gambling. Yeah, exactly, Shauna. I think this might be the leg that takes us down. What the hell? These people are always on break? Is Jerome talking right now? It might be on YouTube. 1 second. Yeah, it's on YouTube. Oh, man.
Order submitted.
Actually, wait a minute.
Order canceled.
But that's past the breaker. No. I can't do that. This is very close to where I was going to go long. Right there.
Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. I will note that at the outset that this hearing has a hard stop at 1 p.m., which
Thank
we
God.
will strictly observe. I'll now recognize myself for 4 minutes for an opening statement. Welcome, Chairman Powell. Thank you for being with us today. For the last 4 years, inflation has crushed Americans. Today, it takes $1.21 to purchase what just cost $1 in January of 2021, as measured by the Consumer Price Index. The erosion of Americans' incomes and thereby their savings was caused by a combination of irresponsible fiscal policy, supply chain disruptions, but also by, in my view, the Federal Reserve fighting the last war, staying too low for too long. Chairman Powell, you and I have discussed that previous hearings of the Fed, like many others, assumed that the pre-pandemic era of low inflation and low interest rates would continue.
See, this is where I think the indices are going to go back down to take out those lows I talked about in the morning.
August 2020, only 7 months before inflation began its 4-decade steep march upward in March of 2021. In hindsight, the adoption of the so-called flexible average inflation targeting appears ill-timed and ill-fitted for a post-pandemic world. As the Fed undertakes a review of its monetary policy framework, you must account for the lessons of the last 4 years and think about what's ahead over the horizon, not what has been. The Fed has made progress on inflation, but as the last mile seems the hardest. As Bank of America economist Stephen Juneau said yesterday, inflation is stuck above target with risks to the upside. In August 2022, with inflation raging, you gave a speech that echoed some of your predecessors as chair. You vowed to keep at it till we're confident the job is done. It's a vow you should fulfill. With this morning's confirmation that inflation is well above the 2% target at 3% and making move upwards, other economic indicators are positive. As you reported yesterday, a low inflation rate, solid GDP growth, and financial conditions continue to support expansion and investment. This is not a time to say that there are no risks, but some perhaps unseen. However, these risks, in comparison to the risks of a resurgence of inflation, are modest. Given the already high prices due to President Biden's inflation, Americans simply cannot afford further price increases at the grocery store and gas pump. Such a resurgence would likely force the Fed to begin another tightening cycle, making mortgages, credit cards, and small business loans unattainable for many. That's why I urge the Fed to forge ahead with its monetary policy duties until you're confident the mission is economic prosperity that will be led by Chair Frank Lucas. The task force purpose is to ensure that the monetary
Frank Lucas, wasn't that the guy in American Gangster?
And prioritize for this committee. And I look forward to our first hearing of the task force. I now want to turn to some of the other Fed responsibilities, bank regulation and supervision. The Fed was created by Congress to be an independent agency. The intent is to insulate the Federal Reserve's monetary policy from political influence. Unfortunately, in the last 2.5 years of the Biden administration, the Fed took on serious liberties with its independence in the areas of supervision. In law, Federal Vice Chair for Supervision is to develop policy recommendations that then are been brought to the Board of Governors for consideration. In my estimation, over the years, you and the board have been too deferential to the statutory vice chairman for supervision.
See, just like I was telling that other guy, that 50 level on the indices is so important. And I think that will be the downfall that will take us down. And I think that's where we're going now.
Chance right now to get back on the right track and preserve its independence for the long-term benefit of the American people. And with that, I yield back. Chair recognizes Mr. Lucas, the chair of the Monetary Policy, Treasury, Market Resilience, and Economic Prosperity Task Force for 1 minute.
Thank you, Mr. Chairman. While there are differences of approach in this room, a bipartisan guiding principle is that maximizing economic growth is the path to economic prosperity. It is the single greatest factor in delivering opportunity and improving the quality of life for the folks back home. The actions of the Federal Reserve and the machinery of monetary policy play an important role in economic stability. With the 5-year review of the monetary policy framework underway, I hope this will be an opportunity to evaluate the effectiveness of the Fed's toolkit and its vast influence on the lives of every American. The creation of the new monetary policy Treasury Market Resilience and Economic Prosperity Task Force will afford us the opportunity to dive deeper into this topic. Chairman Powell, thank you for being here. There are real issues that deserve our attention, and I hope today will be productive. I look forward to hearing your testimony on the state of the economy, where we're at, and where we're headed. Yield back, Mr. Chairman.
Gentleman yields back. The chair recognizes Mr. Vargas, the ranking member of the Monetary Policy, Treasury Market Resilience, and Economic Prosperity Task Force, for 1 minute.
Thank you very much, Mr. Chairman, and thank you, ranking member. And thank you, Chairman Powell, both for your years of public service and for appearing before our committee today. As a ranking member of the newly formed Monetary Policy, Treasury Market Resilience, and Economic Prosperity Task Force, I look forward to working with Chairman Lucas and the rest of my colleagues to address these important issues. The research is clear. Independent central banks perform better in carrying out their mandates than politically motivated central banks. The independence of the Federal Reserve is crucial to achievement of this dual mandate goals to maintain both maximum employment and stable prices. And although this dual mandate has been criticized by some, it continues to serve Americans well. It has not prevented the Fed from making substantial progress on driving down inflation, all the while avoiding a recession, which many saw as inevitable. I look forward to your testimony, Chairman Powell, and I yield back.
Gentleman yields back. I'd like to turn to the gentleman from Michigan and yield to him for a point of personal privilege. Mr. Heisinger.
Thank you, Chairman Hill. And as we all know, all good things must come to an end. And I want to take a minute to recognize someone who is leaving the committee but has been an integral.
What the fuck? Nobody cares. Well, we got to that level on GC. I moved my, when I had shorted it, I moved my stop limit to break even. Oh, well. Would have been a nice gain right there. Still contemplating whether to long this here. We didn't hit that breaker level. A couple points off. But my next thesis for GC, for gold, was that we'd bounce here and take these highs and then eventually take Asia high. So I think that is potentially the case. And I think we get down there on ES. Why does the house waste so much time with theatrics? I don't know, bro. My mic volume is too low. You can't hear me right now? I think you can hear me. All right, cool. Oh, Jerome's talking. 1 second.
To monetary policy. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose 2.5% in 2000.
Mr. Chairman, can we ask you to pull your mic a little closer, please? Thank you so much.
Sure. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose 2.5% in 2024, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have declined in the fourth quarter, but was solid for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid and appear to have stabilized. Payroll job gains averaged 189,000 per month over the past 4 months. Following earlier increases, the unemployment rate has been steady since the middle of last year and, at 4% in January, remains low. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures. The strong labor market conditions in recent years have helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer-run goal. Total PCE prices rose 2.6% over the 12 months ending in December, and excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. Since last September, the FOMC lowered the policy rate by a full percentage point from its peak, after having maintained the target range for the federal funds rate at 5.25% to 5.5% for 14 months. That recalibration of our policy stance was appropriate in light of progress on inflation and the cooling in the labor market. Meanwhile, we've continued to reduce our securities holdings. With our policy stance now significantly less restrictive than it had been and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the FOMC will assess incoming data, the evolving outlook, and the balance of risks. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly, or if inflation were to fall more quickly than anticipated, we can ease policy accordingly. We are attentive to the risks to both sides of our dual mandate, and policy is well positioned to deal with the risks and uncertainties that we face. This year, we're conducting our second periodic review of our monetary policy strategy, tools, and communications, the framework used to pursue our congressionally assigned goals. The focus of this review is on the FOMC's Statement on Longer-Run Goals and Monetary Policy Strategy, which articulates the committee's approach to monetary policy, and on the committee's policy communications tools. The committee's 2% longer-run inflation goal will be retained and will not be a focus of the review. Our review will include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. We will take on board the lessons of the last 5 years and adapt our approach where appropriate to best serve the American people to whom we are accountable. We intend to wrap up the review by late summer. Let me conclude by emphasizing that at the Fed, we'll do everything we can to achieve the dual mandate goals Congress set for monetary policy. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. Thank you, and I look forward to our questions.
Thank you, Mr. Chairman. Chairman yields back. I want to recognize the ranking member of the full committee, Mrs. Waters from California, for a 4-minute opening statement.
Good morning, everyone. Welcome, Chair Powell, to our country is on the precipice of an economic disaster unlike anything we've seen in recent memory. While Trump promised lower prices for working class families, we're seeing the exact opposite. In fact, grocery prices are rising. According to the Labor Department, eggs are up 40%, more expensive than they were even a year ago. In my home state of California, we've seen eggs as high as $9 and more for a dozen. Inflation is rising, and it is up to 3% for the first time since June. And other staples are about to get more expensive as Trump levies new taxes on steel and aluminum. America's consumers and businesses are facing uncertainty and chaos. This is all because Trump and his unelected billionaire co-president Elon Musk are taking a sledgehammer to our economy and democracy. In recent days, they attempted to illegally kill the Consumer Financial Protection Bureau, the same agency created after the financial crisis of 2008. Since its inception, CFPB has successfully fought on behalf of working class families.
I'm looking to see if this SMT maintains here between ES and NQ. ES, like I said, much weaker than NQ. And we just hit that 50 mark on ES. We just hit that 50 mark on ES right there. I wonder, and we are in the golden pocket on NQ. I wonder if this does it here. When will the updated rates be published? What does that mean? What are the updated rates? I don't get it. I'm looking at an ES short here, guys. Potential ES short, depending on what happens here. I want to see it close below this. Need to see it close below this. And I think there's a potential short to get down to that low right there. No, dude. Turn your speakers up, bro. I'm looking at short ES, not NQ. Come on. Don't tell me NQ is now the weaker one. Nice.
Among our supervisory agencies. And I do want you to take into account how Basel III endgame proposal interacts with other pending rules, whether they're on liquidity.
I keep talking about this Basel III endgame. It sounds like something out of the Avengers. Come on, man. Give us a break here.
We need to, they're a starting point, not an ending point. Is my
Right.
only point.
But we've had this conversation before. The point is that they do offer a roadmap, and you do mention them in writing in your monetary policy reports, except for one time during the pandemic. And I think, though, that you're adding that to your reference point and your forward guidance and in your communications, I think, would be important. Can you tell us about the review of the inflation targeting and when you expect to complete that?
Expect to complete it by the late in the summer this year. We're just beginning it now, and we're going to look at all the decisions that we made, why we made them back in 2020. We're going to ask ourselves what's changed. We're going to be open to criticism and good ways of thinking about it, and I think we'll make appropriate, discrete adjustments.
I thank you for being with us today, and I turn to the ranking member of the full committee, Mrs. Waters, for 5 minutes for your questions.
Thank you very much, Mr. Chairman. It is no secret that President Trump, what he wants to do.
I can't listen to this. I have it up just for news. I can't listen to this, guys. I'm sorry. Setting up for a long? No. Oh, CL? Could be. Yeah, I haven't looked at CL much. I was focused on gold, which had two nice moves, a short and a long. And now I'm looking at a short on ES. Potential short on ES, but we're not getting confirmation here.
I have nothing for you to report today on that.
Well, you know what happened to Treasury, and you know what happened over at the CFPB, and the people of this country are being violated because all of our privacy is being taken up by Elon Musk and Trump, and we don't know what all they have on us, our bank accounts, everything that in our lives. So I want to protect it in the face.
This lady's in my state too, which is crazy because I don't know. If I had the time, I think I would do that job better than her. But I don't want to be a politician. It's just crazy that since I was a kid, I think she's been a congressperson here. We have a macro coming up in 12 minutes. And I'm still looking at a confirmed short here. We just need to close below that order block right there. The fuck? Yeah. 1 second. I gotta log into my prop accounts. 1 second. That's what I have connected to my trading view. It's my prop account and my Tradeovate account connected to the copier. Well, no confirmation here. That's ass. Not yet, but we will get it. Oh, what a push. We traded grab calls maybe like 2 weeks ago.
Timeline on this particular review, but I'm curious, do you believe that the last policy framework limited the Fed's response to raising inflation, something that you and I have talked about over the years?
No, I'll tell you why we didn't raise rates. We thought the inflation was transitory. I can show you forecasts from the end of 2021 by us, by staff, by the blue chip. Everybody thought it was going to be transitory. That's why we didn't raise rates.
And I also distinctly remember a hearing where you and Secretary Yellen at the time were sitting next to each other, and it looked like you visibly scooted away when I asked you both whether it was still transitory, and you had, for the first time ever, a separate answer. Her answer was yes, it still was transitory. You gave a very Fed speak answer of, we no longer believe the data shows that. So no. And to kind of go to Chair Hill's point, we think that might have been a little late on that. On back to the review, I'm curious, what sort of input are you looking for from the public and from Congress as you go into that review?
So from the public, we'll do a series of Fed.
Yeah, super happy to have picked up Costco for sure. That was my biggest play this year, definitely, was Costco. And then Uber. Tesla is up, everything else. Yeah, I mean, Tesla has been freaking beat up. So today's a relief day. Like I said, off of the 100-day moving average. Is this the final straw? Tough to say, but there is potential for a lot more downside on Tesla. It can drop to 275. You can dollar cost average here. I personally don't think that there's an options play here on Tesla. So far, the only A+ trade that I've seen was on gold. No, I'm not in Tesla puts. What were the parameters you initially found on Uber and Costco? Just the technical setup. I wonder if, see this high here? That's the 830 high. I wonder if we take out the data high first. I'll be right back, guys. Give me 1 second. I'll be right back.
That has support on both sides of the aisle. Mr. Huizenga mentions the importance of your dual mandate. Project 2025 calls for abolishing the dual mandate and eliminating a mandate that you focus on employment. If we were to give you just one mandate dealing with price stability and take away the mandate on employment, over the next 10 years, would our GDP be higher or lower?
It wouldn't be possible for me to say.
Does the fact that you focus on employment as one of your dual mandates lead to lower unemployment, higher employment in our country?
It may do so. We do balance those things.
Thank you.
To some extent, that may be right.
Chair Hill spoke about how important it is that you maintain your independence. I noticed that in light of the hiring freeze, the Fed has removed all its job postings. I'm hoping that your personnel policy will be as independent as everything else at the Fed. But I'm more concerned with the President's statement at 7:58 this morning, where he said interest rates should be lowered. He said it. Will that influence what the Fed actually does?
I, as a practice, never comment on anything the President says, but I think people can be confident that we'll continue to keep our heads down, do our work, make our decisions based on what's happening in the economy, the outlook,
And
the balance
statements
of risks.
by elected
No
officials
change.
are not among the things that cause you to act one way or the other.
That's correct.
Thank you. And he went on to say, he said interest rates should be lowered, something which would go hand in hand with upcoming tariffs. Let's rock and roll America. I certainly agree with the rock and roll America, but the Peterson Institute says that the policies that the President ran on will raise the CPI by between 4 and 7.5 points. And I think the biggest element of that is the proposed tariffs. If we have higher tariffs across the board, say 10 to 25%, would that increase the cost of living? And would an increase in the CPI or related indexes of the cost of living lead to higher interest rates?
You know, there are many organizations, public and private, whose role is to speculate publicly about what this might be. What we're doing is we're reserving judgment until we actually know what the policies are.
But if we have a higher cost of living, does that lead to higher interest rates? The CPI goes up, or CPE, excuse me?
Well, if inflation goes up in general,
Yeah.
forget about tariffs. In general, of course, we will use our tools, which is the interest rate, to bring it back down to 2% over time.
Okay. Yesterday, you told the Senate we're going to release the stress test scenarios before we implement them. Will you take a holistic look at large bank capital requirements, including the risk-based capital ratios like Basel III Endgame, stress testing, to make sure that you don't have a contraction in the ability of credit to Main Street businesses?
Yes.
Great. There's a proposal in Project 2025 that we abolish Fannie and Freddie. If there was no explicit or implicit federal guarantee for those who invest in mortgages, would that lead to higher mortgage interest rates?
Since you'd no longer be borrowing on the credit of the United States, in other words, so Fannie and Freddie would be privately funded, it could lead to that. I think privatizing Freddie and Fannie might have other virtues too, though, as has been considered many times by this committee and others.
Might have some virtues, but it would lead to higher mortgage rates.
It could.
The CFPB has been put on ice, but all the regulations remain in force. So if you're a bank that wants to comply with those regulations, there's nobody that can give you any clarification. So you don't know. And if you're a bank that doesn't want to comply, the next presidential election may put into practice a CFPB that enforces all the regulations that the Trump administration has tried to eliminate. Does that cause confusion for banks?
You're speculating about what the situation might be. I would say that it could.
I yield back.
Gentleman yields back. I now recognize myself for 5 minutes. Chair Powell, let's talk about the balance sheet. As we've discussed several times before, the consistent and massive growth of the federal debt creates long-run challenges for both the United States and saddles future generations with an onerous burden. But it also creates a challenging environment for the markets as the Treasury market expands in kind. As the Fed engages in quantitative tightening, allowing the Treasuries to roll off, the Fed is careful to ensure that there are ample reserves for the balance sheet. Could you briefly discuss the conditions that determine the ideal level of reserves?
Sure. So let me say that we intend to slow, and we have slowed, but then stop the process of shrinking our balance sheet at a time when we think that reserves are somewhat above the level that we judge to be consistent with our ample reserves framework. So what that means is we want reserves to be ample, meaning we don't want them to suddenly appear to be shortages of reserves. So we're going to think of where those shortages might appear, and we're going to put a buffer on top of that, because nothing good happens when there's not enough liquidity. So that's our overall framework. And right now we feel like all the evidence suggests that reserves are still abundant, which is more than ample.
As you know, in early 2021, the Fed stated that it would invite comments on the supplemental leverage ratio. That has not happened yet. I've made the point that the growth of the U.S. Treasury market paired with a decreased willingness of banks to act as intermediaries is a major issue on the horizon. When former Treasury Secretary Yellen was before this committee last year, I asked her about the resiliency of the Treasury market, specifically about the wisdom of permanently modifying the SLR. She said it's something that the banking regulator should consider. Does the Fed plan to finally look at the SLR?
Yes, I believe we will. I have, for a long time, like others, been somewhat concerned about the levels of liquidity in the Treasury market. The amount of Treasuries has grown much faster than the intermediation capacity has grown, and one obvious thing to do is to reduce the effective supplemental leverage ratio, the bindingness of it. So that's something I do expect we will return to and work on with our new colleagues at the other agencies and get done.
Because I think my colleagues are aware that over the course of recent times, literally we have 8 times as much debt to process, but only half as many major market makers.
So this right here is yesterday's low. What they're talking about is important. It's about the liquidity of the Treasury market. But this right here is yesterday's low. So right now, ES is hamstrung there, but we also hit the golden pocket. And we are threatening to close below the fair value gaps. And there is also a change in the state of delivery here if we close below it. NQ already looks weaker. The weakness has shifted, or the strength has shifted. So what I want to see here is, can we get a confirmation short in this macro, or does the market want to take that 830 high, right? But if we get a confirmation short, there is a draw on liquidity down below, which in my view, 10, 11, 12, 1, 2, which in my view is that low right there. So that's what I'm looking at right now. What do you think about Amazon for long term? It's great, bro. But I think if you're buying stocks here, I think you're really late on a lot of things. There are some values here and there. But on most things, I think you're late.
And I recognize the gentleman from New York, Mr. Meeks, for 5 minutes.
Thank you, Mr. Chairman. Chair Powell, thank you for being here today and you've indicated in past hearings that geopolitical tensions pose important risks to global economic activity. In fact, around this time last year when you appeared before the committee, you and I discussed how conflicts around the world, specifically the war in Ukraine, had impacted the cost of things like groceries in the United States of America. At that time, you indicated that the war had caused commodity prices to move sharply back home. Does that sound correct to you, if unfamiliar to you?
Yeah, I'm looking to see that too, Alistair. I'm looking to see that too. Of course, this could be, if we don't get that confirmed, that confirmation, this could just be another entry long to get to that 830 high. But it's a pretty tricky day because I think strength and weakness has flipped. I think ES is a little stronger now than NQ. And we do have divergence here, bullish divergence. So there's a lot to mitigate here.
Judge or to say on that?
Well, we do know that a number of, like USAID, they buy a lot of their agricultural products, et cetera, from American farmers. And in fact, it helps the U.S. economy when you look at the volume of agricultural products that are being bought so that we can continue to be a part of the rest of the world. Would that be correct?
As far as I know, yes.
So, you know, today we find ourselves facing a situation where the president and his Dodge buddy Elon Musk seem hell-bent on dismantling.
He called it Dodge. So funny. Oh, man, this is so ugly, man. I wish it would just shut the fuck up and let us trade. So far, again, the only A-plus thing that was on the table was on gold. And like I said, I do think there's a multi-day trade on Nvidia, which I will be sending out in the Discord when I sign off. I think there's a potentially monster trade here on Nvidia. I'm very curious to see what the volume will be later today for Tesla, because there was a lot of sell volume, to be honest, and I think we need to see increased buy volume for us to be able to launch from here. Otherwise, this is just a breather from a very brutal 2 weeks, 3 weeks on Tesla.
Mr. Chairman, you and I both know that way back when, and we assume 21, that there was a decision made by the Fed that gets close to quantitative easing and then the term tapering. And we know that it was sold as a monetary stimulus to help the country, and I get that. There was about, in my opinion, $2.33 trillion that were taken out in loans. And Chairman just spoke a minute ago about the term debt versus growth. Debt versus growth, about this amount of money that sits out there on the debt side. Could you please take a minute and discuss this issue and how we should be looking at it? Thank you.
Sorry, Mr. Sessions, are we talking about asset purchases that we made during the...
We are. We're talking about when the Fed went and sold
QE.
treasuries.
No, we bought treasuries.
Bought treasuries.
Yeah, we bought treasuries. So, it was a situation, I'll tell you why we did it. We were just out of the worst part of the pandemic, and we didn't know frankly, how good things were going to be, how strong the economy. We were very concerned. COVID is still raging, and it actually, had a very strong wave right into 22. But we wanted to we didn't want to stop buying treasuries too soon, because that has a stimulative effect on the economy, because we didn't want to provoke an unwanted tightening in financial conditions at a time when we thought the economy was still vulnerable. You look back in hindsight, we probably could have done that earlier and halted purchase earlier. In any case, we turned right around and started shrinking the balance sheet, and
You moved it from about 120 a month to 110.
Well, we're down now. We've been tapering for 2 years now, and we're down more than $2 trillion.
This dude is so dumb. He might be the dumbest one there, like outdoing Maxine Waters.
Term aggregate versus with what the chairman said, debt versus growth, because we believe the debt remains and the growth is not equaling that ability to pay it back.
So what happens is we borrow money to cover the spending that Congress has done. Our purchases don't affect that. We're basically issuing reserves, which is cash, and we're retiring Treasury securities. And the effect of that is to drive down long-term rates. That's the whole reason for QE.
And what are you paying for those long-term rates?
Market rates. We're paying exactly the market.
And what would that market be approximately a year ago or to now?
Well, the 10-year, we're not, of course, we're going in the other direction now. We're shrinking now, but
we are.
Buying, the 10-year was yielding a very, very low.
This reminds me of when your parents are trying to ask you about something very specific that you're into. I don't know, like comics or sports or something. And bless their heart, but they might not know a lot about the topics, but they're trying to ask detailed questions. That's the sense I'm getting here. He's like, what rates did you pay for those treasuries?
Immediately started shrinking the balance sheet, and we've shrunk it a lot, $2 trillion and still counting.
You have shrunk it $2 trillion?
Yes, we have.
And what do you believe remains, and you believe you're now stable for moving forward?
So I think we have a ways to go. Actually, the level of reserves, which is the thing we're focused on, hasn't really changed. All of that has come out of what's called the overnight reverse repo facility. I'd be happy to spend some time with you on this. This stuff is very complicated. And
yes, I've tried to find new data on it, and the last I found really was a CRS report of 22. So what's
very big changes
127, 22. And so the changes that you speak of are important.
Yeah.
And so I would.
There's no way we elected these people.
Be happy to do that.
Great. I want to thank you for being here. The confidence that the American people have that we will turn not just the economics of their lives, but of the country is very important. And I today spoke about the country. And I want to thank you for your service and time. Mr. Chairman, I yield back.
The gentleman yields back. The chair now recognizes the gentleman from Georgia, Mr. Scott, for 5 minutes.
Thank you very much, Chairman, and welcome, Chair Powell. Chair Powell, I'm worried about these tariffs. And I want you to kind of share with us your thoughts on these.
This guy looks like Smokey Robinson.
I'm worried about it. I think the president is wrong here. Tariffs can cause a terrible situation to the economy. I'm concerned about the inflationary impact on tariffs. And where cost increases from the tariffs, there's a cost to these tariffs. And we need not move into this area blindly. And some of these costs will be absorbed by business.
He said it's an age thing. You know, it isn't. I looked up Jerome Powell's age. He's he's exactly as old as my dad. He's an old guy. He's I think he's 73, I want to say. Let me see. How old is Jerome Powell? While this trade sets up. He's 72. Yeah. So my dad is 73. This guy's 72. So Jerome Powell's old, but Jerome Powell has his wits about him. You know, say what you want. The guy is fucking smart. Bro, stop smoking. Smokey is light skin. Bro, this guy looks like Smokey Robinson's brother. All right? How about that? Yes, I know Smokey's a little more light skinned than that. Smokey Robinson's probably lighter than me, but also Smokey Robinson has been bleaching the fuck out of his skin. All right? Look, you think that Smokey Robinson looks like this naturally? He's on that fucking Sammy Sosa cream, bro. Look up old pictures of Smokey Robinson. If you look up old pictures of Smokey Robinson, he definitely didn't look like fucking Sammy Sosa. All right, so what I want to see here is I want to see a change in the state of delivery on ES or NQ to see if we can confirm a short. I love it when we're cruising together. Don't get it twisted. Smokey is got some amazing music, but he's definitely bleaching his skin.
Enacted. And remember, it's not just tariffs. There are significant changes to immigration policy, fiscal policy, and also regulatory policy. You put all four of those, and all four of those were things that the president was elected to do. We will then try to make an intelligent judgment about the overall effect on the economy of those, and conduct our policy accordingly. But it's not our role in any way to comment on the wisdom of the policies that are enacted by Congress or by the administration.
Well, he have an effect on whether or not you will resume your plan to cut the interest rates this year or continue to hold.
So we'll make our decisions as we go about what to do with interest rates based on the data that we see, the outlook, the evolving outlook, and the balance of risks, and we'll be considering all of those things. We won't be focusing on any particular policy, and I can't tell you what we'll be doing because it will really depend. It's a fairly uncertain environment right now.
Yeah.
The underlying economy is very strong, but there's some uncertainty out there about new policies. We're just going to have to wait and see what the effects of those policies are before we think about what we can do.
Well, all I want to say, God bless you. I know your strength. We've worked together over the years on many things, and this nation is grateful that we have you, your wisdom and intellect at this time.
I agree,
So
but the
that-
gentleman's time has expired. Gentleman, back. Chair now recognizes the gentlelady from Missouri, Ms. Wagner.
I thank the chair, and it's good to see you again, Chairman Powell. Chair Powell, under the Biden administration, American families were hit with a huge stealth tax from, as we've spoken about, inflation. That drove up grocery prices and led to high rates on things like mortgages and car loans. Since 2021, the average Missouri household is paying about $1,100 more per month due to inflation. To put that number into perspective, the median family income in Missouri is $69,000. These families have had to spend $13,000 more of their annual income on the exact same goods. What specifically is the Federal Reserve's plan for making life easier for everyday Americans?
So the best thing we can do for Americans is to vigorously pursue both stable prices and maximum employment. We're trying to get back to a long expansion where prices are stable around 2%.
You seem to be there on labor, as you've pointed out, so tell me what else?
Sorry?
You seem to be there on labor, so what else?
You know, I would say we're close but not there on inflation. And you did see today's inflation print, which says the same thing. I mean, we've made great progress toward 2%. Last year, inflation was 2.6%. So great progress, but we're not quite there yet. So we want to keep policy restrictive for now so that we can see.
We're definitely not there for 30-year mortgages, you know, upwards of 7%, Chair Powell. So let me switch topics. I continue to believe that, as we've spoken about and as was brought up prior colleagues here, that the federal banking agencies, including the Federal Reserve, should scrap the flawed Basel III endgame proposal and start over. You talked a little bit about how you plan to perhaps do that and a timeline potentially, but how will the public, Chair Powell, be able to provide comments on any revised proposal as required by the Administrative Procedures Act?
So I fully expect, and I think it's a good idea for the United States to finish Basel III in a way that's, you know, in keeping with Basel and also with what other jurisdictions are doing, comparable jurisdictions.
The key there is end game. This has been going on for 2 decades.
Where's the end already, right? So, you know, we'll put all of that out for comment again and welcome the comments for all commenters.
I should make sure we're following the Administrative Procedure Act.
Oh, yes.
As you move forward.
We will.
Chair Powell, I understand you are interested in making the stress test scenarios that assess how a bank will perform through a crisis more transparent. As things stand now, while the Fed may make some information public, it doesn't show its math, which makes it difficult to assess the robustness and analytical rigor of the stress tests. Recently, the Federal Reserve announced that due to
350 guys
evolving
up 350 per contract. Waited patiently for this one. You can take profits if you wish. Up 450, guys. Fuck yeah. We sniped the shit out of this. 2-1 on this is 6040, around there. I'm contemplating closing this here for a quick. I really think that, you know, the draw on liquidity is that low that I was talking to you about. It's taken a while. 500, guys. Let's go. I might place this here.
genius in it. But it is an attempt to provide a regulatory framework for cryptocurrency. And in that proposal, which is similar in some respects to the House proposal, it would allow individual states to oversee issuers, and there would be no central federal authority. The idea is to disperse the responsibility from state to state. My concern, my overriding concern, is that that with that spread of and expansion of crypto, and the president is 100% behind it. He just started his own meme coin. He's making a lot of money off of that, which is another issue. My concern is that the spread of an expansion of crypto will infect the traditional banking system because it's a volatile, speculative asset, and we've seen some very sudden disasters with crypto. I'm just wondering, are there any backstops that we can use, any firewalls that we can put in place that might insulate the traditional banking system, because they have access to the discount window and they're FDIC insured, so there may be, second order impacts if we have it.
Guys, there's 1,000 of you here and only 463 likes. Give it a thumbs up, guys, for all the patience waiting for this trade, getting you guys a trade that's up 500 per contract. Come on. Come on. Patience pays, guys. Take profits if you wish. I think we can flush a bit more. I don't like the time that we're in, 11:16. It's an awkward time, but it is an awkward day. We have CPI. We have Powell answering the circus. Anonymous, appreciate your donation. I'm just here for the comedy. Well, give it a thumbs up for the comedy. I'll explain the trade to you guys, why I waited so long and why I finally pulled the trigger. I'm just going to wait for it to play out. You can take profits here. 500 per contract is not too shabby, guys. And I'll explain why I took it in ES and not NQ. Good job, Bobby. Shri, appreciate your donation. Thank you so much, Shri. Very kind of you. Good job, John. I really want to see if we can get to at least to 6034. potentially 6024, like down here. When do these clowns finish? 1 p.m. I'll put a nut on the chart if we surpass this. I'll put a nut on the chart. Appreciate your donation, Bobby. Like I said, take profits if you wish. I'm personally, I want to play for a much bigger move here. We could get a bounce up back off of the CISD. I love our entry, so I'm personally not going to move my stop limit or my entry. I'm just going to see if we can get some more death here. Both NQ and ES, they're stalling out in the same area. Not a surprise because we do have a very big imbalance here. NQ getting rejected now off of the 0.5 level. Very nice push here. 550, 600. Hell yeah. 650, guys. 700, guys. Let's go. I think we get a bounce from here. So book it if you wish. I think we are going lower on the day, but I think we get a bounce from here. I booked this in my real money account in my Thinkorswim, but in my prop and Tradeovate, I'm going to keep it open. So I booked it in real money. NQ strength is showing up here. I'm gonna explain the trade for you guys in a second. Just give me a second.
I would like to compliment you for
what the fuck
standing up.
No, bro. I'm going to break down the trade entirely for you guys. Just give me a minute. And yes, for those asking, I trade live every single day on the Discord. So if you want a very similar experience on a daily basis, make sure you come and join us, folks.
Order submitted.
What is going on here? Okay. Okay. I love it when we're cruising together. $800. Keep going. Who's this? Is this Cash Patel?
Into a general fund.
Bro, this guy, Mr. Green, looks like there's this casino that's on an Indian reservation out here in California. And you know, it's owned by a Native American family. The manager of that casino looks like this guy. It's Cash Patel Sr. Let's go. Push, baby. 800 now. You know what? Once NQ fills this gap, I think that'll be wherever NQ is, I think that'll be the end of this move for ES. So I'm putting an alert there on NQ. Oh, I see. There's a little 1 minute gap here. We'll move the buy up a little bit. Guys, I have a question. How many of you took this trade? Put a W in the chat. I want to see. Hell yeah. We got Saturday Night Live going on this screen. A live trade going on this screen. This fool said L. How did you take an L, Louis? And Bobby K. How did you two geniuses take an L on this? I really want to know. Bobby K and Louis L. How in the fuck did you take an L? Bobby said, I just woke up. Yeah, that is an L, bro. All right. Glad to have given you guys a trade. We were patient. Oh, I said I would explain it. So essentially what the trade was, and I'm opting to just stay in it on my prop. I took profits in my real money. I'm going to let it play out. It might come back and give another entry. I might even take another contract, but you know, it was up 800 per con. You guys should be out. I'm just looking to play longer on my prop accounts. But the trade was essentially this, right? So NQ and ES both obviously tanked after CPI, and we had a rally. Now, it's important to note, where did we rally to? We rallied to the golden pocket on both. But also this was London high, right? This right here is a bearish breaker. Same thing on ES, right? We had London high. It didn't reach there. So that right there is a kind of divergence. So ES also rallied to the golden pocket, but didn't reach London high, London low, whereas NQ did take out London low. So then it was a matter of finding an entry from there. And off of the 2-minute, we closed below this inverted gap, and there's an order block right there. So not only did we get the IFVG, but we got the CISD, which is a change in the state of delivery. So I set my sell order there, and we wicked up into it and took it and went all the way down. Now, later in the day, obviously it could be ugly until we get there, but I really do think that low of the day is the draw on liquidity, with a potential for this to be the ultimate draw, right? This is this week's low. So there is a potential for that to get hit, but obviously we only need a part of the move in order to be profitable. So that essentially is the trade right there. And then if you look on the 1 hour, both NQ and ES also have this hour fair value gap, right? So we took 50% of it on ES, filled almost the entirety on NQ, and yeah, so high time frame and low time frame, but waited patiently for that. You know, had a couple of nice trades on gold, was stopped out on break even, but the thesis still remained. But those were the only trades that I was looking to make intraday. I am looking at a potential monster trade on Nvidia because this setup is beautiful here. This is the type of setup that you want to see. So I will send that out in the Discord. If you want to trade with me, make sure that you sign up. Use the link in the description. Trade live with me every single day. I go live every single day at market open, just like you see here. We day trade futures, sometimes options. I swing trade options. And then obviously long-term analysis in terms of stock buys as well. So, you know, most people would, if you combine all your streaming services, you're probably paying a fuck ton for watching garbage. At least come and watch somebody who's going to teach you how to trade, how to be patient, how to do risk management, etc. Like, I'll wait all day for a trade, but once it hits, we're going to be in it. I'm going to let this play out. I have a feeling I'm going to get max value for this trade here. It's going to end up being over $1,000. But yeah, sign up in the description. Get yourself a public account. Not only is it free options, but they also pay you for every options trade. And I will see you guys on the next one. For those of you in the Discord, I'll see you in the Discord in a minute. Peace.